Every day, billions of dollars move through a market most people have never really had explained to them. It's called the futures market, and whether you realize it or not, it affects the price of the gas in your car, the food in your fridge, and even the stock portfolio you might already own. So what actually is it?
A futures contract is an agreement between two parties to buy or sell an asset at a fixed price on a fixed date in the future. That's the whole idea. Nothing more complicated than that at its core. Futures didn't start on trading screens. They started with farmers. Back in the 1800s, a farmer planting corn had no idea what price that corn would sell for months later at harvest. Prices could swing wildly based on weather, supply, demand, all kinds of unpredictable factors. So farmers started making deals ahead of time with buyers, agreeing today on a price they'd get months from now. That gave both sides certainty instead of a gamble. That simple idea, locking in a price now for something that happens later, is still exactly what a futures contract does today. The only difference is what's being traded has expanded massively. Now you can trade futures on gold, oil, currencies, interest rates, and stock market indices like the S&P 500 or the NASDAQ 100.
Here's the part that surprises a lot of beginners. When most people trade futures today, they're not actually planning to take delivery of a truckload of oil or a bushel of corn. They're buying and selling the contract itself, trying to profit from the price moving in their favor before the contract expires. The farmer's tool became a speculator's tool, and it became one of the largest, most liquid financial markets in the world.
Institutions use futures to hedge risk. Corporations use them to lock in prices on raw materials they need. And individual traders, people just like you watching this video, use futures to speculate on where prices are headed, often in markets like stock indices, gold, or crude oil.
So why does any of this matter to you? Because futures give you a way to participate in massive global markets, often with less capital than you'd think, and with more flexibility in when you can trade than the regular stock market allows. But that flexibility comes with real risk, and understanding exactly how these contracts work is the first step before you ever risk a dollar.
That's what this channel's about, breaking down exactly how these markets work, piece by piece, starting from the ground up. In the next video, we're going further back, the actual history of how futures went from farmers hedging crops to one of the most active trading markets in the world. If this helped make futures make sense, subscribe, because we're just getting started.